we'd be heading all the way back down there. Everybody said that gold is dead. It's lost all its air. That's not true. Gold is not dead. Gold is not going anywhere. So anyone who has doubts about gold going anywhere, I hate to tell you, it's been here for 6,000 years. It's not going away tomorrow. And the price support is there. You see it in the price. So I think the outlook for precious metals, I've been telling people lately, I'm not expecting anything massive to happen from now until the end of the year. I think it's a great time to be accumulating because you're getting it on that trading sideways, trading downwards. We talked about buying on the dip, and you are preparing yourself for the next crisis. When is that crisis going to occur? We don't know, but there's enough risk in the market right now, including the things we talk about, to definitely be getting ready for it.
Welcome to the Gold Republic podcast. My name is Bart Brandt.
And I'm Alexei Jordanov. In our weekly podcast, we invite guests from all over the world to get valuable insights
into the emergence of a new monetary system through the lens of precious metals, cryptocurrencies, and other financial instruments. Welcome to a new episode of the Gold Republic podcast. Today, our guest, a recurring guest, Mark Yaxley. So, since our last interview, what has been the most surprising event in the markets that you have seen? And also, can you give us an analysis of, what the Fed just did? They announced they're going to taper quantitative easing.
Right. Good to be back with you guys. Always a pleasure. I mean, I don't know if it's surprising, but since we last spoke a few months ago, probably the most interesting development has been the inflationary environment that we're now deeply entrenched in. I think we just mentioned it in passing the last time we spoke. It was starting to become a little bit of a buzz on the street, and now it's basically dinner time conversation. I know even with friends and family, people that aren't necessarily very serious investors or don't follow the economy very closely are now talking about inflation. Everyone is feeling the pinch in their pockets of the rising prices, consumer prices that we're all facing globally. I think that has emerged as probably the most significant piece of news, and that ties directly into the Fed now tinkering with interest rates to try to correct a situation that ironically they've created for us. So the same people that created this inflationary situation with easy money policies, low interest rates, massive stimulus packages are now the same people that we're supposed to entrust with correcting it for us, which is almost angering, I think. They told us initially that inflation was transitory, that it was a 6-month window. It wouldn't be much higher than the 2% annual target that they say is healthy for our economy, at least in North America. And in fact, it looks like it's an 18 to 24 month issue, if not longer. At this point, it's no longer transitional. They made a point of making that clear in their announcement yesterday. And the actual rate is probably somewhere between 4 to 5%, if not higher. So that's very significant. And I think investors, if they're not already paying attention, need to start paying close attention to inflation and what it is doing to their pocketbooks.
Yeah, exactly. And just to expand on that, we've seen gold prices. They were every time the Fed hinted or threatened to taper quantitative easing, you saw direct reaction in the gold prices. But now that they've announced that they're going to cut back on quantitative easing, they said somewhere between 10 and 15 billion a month. What actually the reaction has been in the gold prices, silver price, platinum prices, they've all gone up in the direct reaction of this announcement. Does that look like a maybe a buy the rumor, sell the fact type of reaction to you, or what is your analysis?
Speaking from experience, Bart, I think that we shouldn't pay too much attention to the initial reaction from the precious metals market to any of this news. It's important to look at gold and silver in the long term, at least the mid to long term, and how the government's behavior is going to impact precious metals. So I think the more important question is, how does precious metals react when the tapering actually begins and when interest rates actually start to rise? The last time that the Fed really started to tinker with interest rates, so there's two scenarios. 2007, they raised rates up into the 5% range, and that triggered a financial crisis within a year. In 2019, rates were raised, and that also, you can't say that it directly triggered the COVID crisis, but it may have factored into the pullbacks that we saw in the equity prices. So my expectation is, as they raise rates, the equity markets, which are by all accounts overvalued, because a lot of that inflationary money found its way into the equity markets, maybe more so than ever before in our history. I think that you can expect, when those rates actually do begin to rise, when the tapering actually does occur, and if it's not replaced with some other kind of stimulus, which it most likely will be, in my opinion, I expect that the equity markets will cool off, and that precious metals might initially cool off, but will probably trigger a pretty strong rally for precious metals as this tapering and interest rate increases actually do occur, which is probably, we're looking really at the effects of that most likely in 2022.
I've actually come across a chart recently that was from the Russell 300,000 growth stocks with negative earnings. Basically, companies or investors making money on companies that make no money, so with negative earnings. And as you can see, they reached all-time high. Here we can see the tech bubble in the 2000s. Here we can see the Great Recession in 2008. And here we see basically during COVID, a crisis here of 2021. Is, in your opinion, or the reading of the markets, are we approaching another bubble?
I mean, it's always difficult to pick the top of a market or to say when a bubble is going to pop. But what we can say with certainty is that equity prices in general right now are inflated. As I said earlier, when you have interest rates that are near zero, when you have massive stimulus packages that are finding their way into the economy, a lot of that money ended up in the equity market. So it's safe to say that the market is very frothy. That some people would coin that as a bubble, and that there's a likelihood that we're going to come off those all-time highs. Commenting specifically on the Russell 3000, and I know that they had a positive reaction yesterday at the news. I don't know where this particular group of companies or the sector is going, but as an investor personally, and to those I speak with, I'm very cautious right now with adding large positions of stocks to my portfolio. I think the underlying message to investors is that they have to be cautious for a number of reasons, and they need to have the proper hedges in place at this point in time if they don't already. If you continue to add risk to your equities portfolio at this point, I think that's a little bit unwise. I think that you should you should actually be adding some protection and de-risking yourself with regards to the equities markets, unless you're talking about mining stocks, of course, because that's another way of hedging by having some precious metal exposure in your portfolio. So, underlying message for me is I think it's a time to really take a close look at your portfolio to make sure you have the proper hedges in place. Because if you're adding to your portfolio at all-time highs, consistently, there's a good chance that you're going to see a pullback at some point in the near future, and you're not going to be well positioned to protect yourself.
You've also shared with us two charts. One is the price movement of gold pre-crisis, and the price of the movement of gold during crisis. So I'll bring them up really quickly. And first of all, why is it so important to look at this chart now? What are the indicators that tell you that we are in a pre-crisis environment?
I've got a number of nice charts here. Okay. There's really 2 points I was trying to make here. Number one, I was trying to explain recently to precious metal investors what to expect when a crisis does occur. Because to your point, look, you've got the Evergrande Chinese real estate issue that we're facing. You've got the slow burn of the inflationary environment that we're in. I think the Chinese real estate situation is actually more of a real catalyst for a potential crisis, something that's going to happen relatively quickly and people won't be well prepared for it. And that could trigger a strong downturn in the equities market and basically in the global economy. That can have devastating effects, not only because these Chinese companies are heavily indebted to banks, and if they default on their payments, that's going to have a ripple effect through the banking system. But also, and this isn't really something that people in North America will stop and think about, but the Chinese development sector, the construction sector, is one of the largest employers in China. They employ tens of millions of people. When a project stops, it's not only the bank that doesn't get paid, the lender that's not getting paid, a lot of people go home without paychecks in their pockets. And that is a serious risk that I don't think enough people are really aware of. But the point of this chart really being, to answer your question, I wanted to give an explanation to precious metal investors what to expect if another crisis does occur. Back in 2008, pre-crisis, the price of gold dropped 17%, basically the first 5 weeks of the financial crisis, followed by a tremendous bull run, appreciating over 140%. So the initial reaction is a downward as people sell off assets and try to cover positions and try to get into cash as quickly as possible. Gold will be affected as well. Gold and silver will be affected as well. And then you'll see a strong bull run. The same thing, the same behavior happened in 2020. Right at the beginning of the COVID crisis, we saw a strong pullback in precious metals followed by a bull run. The second chart that I sent you is kind of a continuation of the same theme in setting expectations for precious metal investors, because and you guys see this a lot, you're in the business, you see a lot of newsletter writers that are calling for very high prices. They'll say, oh, silver is going to be $100 by the end of the year, or gold's going to be $10,000, and they make kind of these outrageous claims. And what I was trying to explain to precious metal investors is, if you look at a long-term chart, this one is a 20-year chart for gold and silver, for gold. When do precious metals really return significantly, provide significant returns? They provide significant returns during crisis periods. Now, that everyone knows that, but it's important to remember that if you're investing in precious metals, 60 or 70% of the time, that investment in your portfolio is going to be relatively flat or trading in a slight downward trend when you factor in things like inflation. But that's not to say that you shouldn't own it. What it is to say, the point of that argument is that you should be buying that asset now while it's trading sideways or slightly downwards, like we've seen over the past few months, in preparation for the next crisis. None of us sitting here today know when that next crisis will begin. We know there's a fair amount of risk in the market, but you certainly want to be positioning yourself pre-crisis to really get the true appreciation and the true return on your precious metal investments during the crisis periods.
Yeah, and if we can take that into account, because of course you're in the business as well, and so you know what your customers are doing. Do you see? Because I think that, if I can speak for Gold Republic, then we've seen this shift in thinking in our customer base, that where they see this correction from the highs that we've seen last year, that people tend to buy dips and stay invested in precious metals. Can you tell something about that? What your experience is? Is there a shift in the experience of your customer base and of course then with you?
Yeah, I think there's, this is oversimplifying things a little bit, but there's basically two types of buyers. You have the more loyal long-term precious metal buyer who is experienced enough and understands charts like this when it comes to precious metals to be buying in these dip periods and these flat and slightly downward trend periods. Those are the people that we're seeing right now. This point in time are buying. Then you have those who rush to the front door when the crisis has already happened, and they see the price of gold going up and they see the price of gold on the front page of the Financial Times. And then you say, well, I got to get some gold. I have to realize a return. That's where the money is. A little bit of the behavior we've seen in the crypto market from time to time. We're all guilty of it. We get really excited about a token or a new crypto, and we rush to the door to try to make a return. Dogecoin probably being a great example of that we saw earlier in the year. So I think you really have those two types of precious metal buyers: those who are very loyal and those who are simply speculating on the price of gold and silver. Right now, we're seeing more of the loyal, but we're seeing a lot of volume. I'm sure you are as well. We're seeing a lot of volume from the physical side of the market. We're starting to see product shortages. We're seeing product delivery delays, and we're seeing high premiums. You can't hide anything in the premiums. Premiums are probably the best way to determine, to use an indicator of what demand is like for physical metal. But on the flip side of that, the ETFs have net outflows right now. So a little bit of a divergence between the paper market and the physical market right now.
Yes, exactly. Yeah, it's really interesting that because I think we're experiencing some of the same things, because, well, I think gold investors, silver investors tend to have the same sort of mindset when it comes to investing. And even though we've seen a little pullback in the prices of the precious metals in as of late, We've seen very steady investing by these investors that are pretty loyal investors in precious metals, trying to see what crisis might come about. Talking about that crisis, and I think it's good to perhaps zoom in a little bit into that Asian real estate bubble, if you might say. At least we can say that they have a lot of debt. The spillover effect. Can you tell something about the possible spillover effect, and could that be the same as, for example, a Lehman Brothers event that happened during or as the start of the big credit crisis of 08?
I think at a high level, the comparison is, there's a lot of comparables between the two events, in the sense that, the housing market crisis is really what triggered the financial crisis of 2008. It was the catalyst, or one of the major catalysts for that crisis. And I think it's fair to say that the risk and the debt levels that we're seeing come out now in the news daily. It's not only Evergrande, it's a number of developers in China that are either defaulting on their debt obligations or having a hard time meeting debt obligations and scrambling to raise capital to meet those obligations. It is probably the largest real estate fiasco of our lifetime, of modern history. If this all goes down, can it have dramatic effects on a somewhat fragile global economy? Absolutely. We've learned over the last 24 months living through COVID and obviously through the 2008 financial crisis that it doesn't take as much as people may realize to tip the scales, because the banks are so leveraged and they're all trading debt with one another. Something that happens overseas in a foreign market like China, especially such a large market as China, it can have devastating effects worldwide. And it doesn't take a lot to tip an equities market that's already overbought and start a pretty serious correction. And once that correction starts, it's the waterfall effect. Everybody runs for the door at the same time, trying to get liquid at the same time. So to answer your question, is it something to be concerned about? Absolutely. You need to pay attention to this event. It's something that I read about daily, and I don't tend to do that. But this one particular thing has really caught my attention. It's something that I'm keeping an eye on as close as possible, and trying to get, not just reading the CNBC reports, but reading reports that are issued by Chinese media, the free media outlets there. Now, obviously, the Chinese government is trying their very, very best to contain the situation. It's a little bit different than what we saw how the U.S. government handled the bailouts that occurred in 2008. The Chinese government is very committed to kind of ridding themselves of the problem. So I think they will do their best to contain it. But is it something to be worried about? Absolutely, you have to be worried about this.
Is there maybe any other big macro events that you think could also be like the fall of one domino?
Inflation for me is the slow burn issue, and how that is going to be managed by the Fed and by the federal government in the United States. They are downplaying that situation significantly. They're trying to now blame the supply chains for rising consumer prices. And ironically, if you stop and ask yourself who broke the supply chain, the answer is the government. Those are government mandated lockdowns and interruptions of businesses that have led to a supply chain issue, which is now, having a kick-on effect on the inflation situation. So I really think we're going to have to wait and see how the markets react to the interest rate tinkering, and to see if the U.S. government actually sticks to their guns and with this tapering proposal by the Fed, is the U.S. government just going to offset that with other stimulus packages? Biden is proposing record-setting stimulus packages right now in the United States, and I'm sure other governments worldwide are doing the same. So, that's really where I'm paying attention, and secondary to that is the real estate situation in China. But not to say that the real estate situation in the United States, are starting to be some troubling numbers coming out there again. And so closer to home, I think that American investors should also pay attention to real estate numbers to see if there's a potential catalyst there.
Yeah, as you can see, Mark, I've just pulled up one of those content I found on Twitter from Charlie Bilelo, and you can see here like a drop down of all the CPI inflation year on year, and the US is is right below Mexico, Russia, Brazil. 10%, Mexico at 6%, US at 5.4%. South Korea, which I just saw, like hit also like the biggest inflation in 20 years. Here also in the Netherlands, we also had like the biggest inflation in also 20, 30 years. So everywhere inflation is ramping up. And we talked about supply chains, but we didn't talk about energy, right? And energy is part of the commodity mix, right? So if we talk about the commodity mix, one element of the commodity mix that is rising in price and being basically inflationary, then it's just a matter of time until the rest follows, right? We have also, like when we look at, I think, the agricultural sector, there is fertilizer, and if I'm not mistaken, so that basically spiked up, and it's just a matter of time until agricultural goods basically follow that curve up as well. So we agree that commodities in general will basically see a spike up in the next years, maybe, or in the years to come. But we've also seen labor costs rise, and then we've seen on all, and this is more of a structural thing because this is month-on-month paychecks that are being paid, and they're getting more expensive. And a friend of mine just sent me this saying like all the news is talking about the fact that labor costs are rising, but it's portrayed as something negative. And as something unfair to say, or not good in a way. But from one side, I can understand him because all costs are rising, but the wages are not. But if wages rise, what does it mean? Is it basically fueling a spiral of even higher inflation?
Well, it certainly won't slow inflation down. Labor costs tend to rise after inflation has already taken effect. And so labor costs rise as a result, generally, of inflation already having taken effect in the economy. Usually people's paychecks being adjusted upwards are the direct result of higher cost of living that they've experienced for a certain amount of time, and now they're going back to their employer and asking for more money. But what's interesting in the rising labor costs now, what's a little bit different, is that it's very difficult to find workers for business owners. I don't know if you're experiencing the same thing in Europe, but in the North American market, because the governments were offering people money basically to stay home during the COVID period, subsidizing their income in a number of different ways. It wasn't only if they were unemployed, it's if they had children, for example, a number of different scenarios. You would receive a small amount of money, and if you added up all those small checks over the month, it was nearly the equivalent of holding down a minimum wage job or a low-paying job. So a lot of those people in the United States and Canada chose not to go to work or are choosing not to work right now. And that's one result, one reason that the labor costs are rising as well, because employees are having to pay more money to fill those positions. They're basically, it was funny, I was speaking to a fairly large business owner in the United States, a client of ours. He owns a production facility. They produce steel goods. And I said, how's business? He said, my biggest competitor is the federal government because the federal government is paying people to stay home. And so he cannot staff his business. He cannot get people to work on the assembly line. So that's another interesting development in this whole scenario, is that the government is actually creating or again, hurting the inflation situation by directly impacting labor costs.
Yeah, making it worse. But if we then focus back onto the precious metals, then it seems that even though we experience these higher inflation numbers every day, go to your groceries, energy, we can experience higher inflation on a very visceral level. Mm-hmm. But then if we look at the charts of gold and silver, platinum, even though we've seen a little bit of, we've essentially seen sideways action. Do you think there's maybe a delayed reaction that we will see the reaction in the precious metals, or have we seen it before and this is now a sense of we've seen the rise and we're now equalizing a bit more up to the next crisis?
Yeah, I think it's safe to say that, we had a strong bull run last year. It is normal. You're going to see some price consolidation coming off a bull run. So we had that sharp rise and maybe some of that inflationary, gold and silver being known as a hedge against inflation. Maybe some of that got priced in during the COVID run. And now we're not able to sustain that same kind of momentum. But it's interesting. Yeah, historically, a lot when you talk about inflation does find its way into the commodity prices. It does find its way into energy prices, obviously. But I was reading recently that in the last few years, a lot of that inflation actually went into the stock markets instead of commodity prices, where it traditionally would funnel it or find its way into commodities. It's actually found its way into equity markets, which is a little bit of a shift from the historical norm. The world has changed in many ways over the last few years. The way that people invest money has changed the last few years. The Robin Hood effect, the social investing. All these things have changed the way that where people put their money and why they invest and how they invest. And that seems to be a trend that's come out of this, is that a lot of that cheap money that was injected into the economy and made available to people actually found its way into the equity markets and not gold. And maybe that ties into the whole the way people's investment behavior are shifting, away from precious metals, more towards Bitcoin. It's interesting. I think we're living through a transitional period right now.
Definitely. And I think there's just recently Raoul Pal, which you know also very well, tweeted out kind of a rant about why basically nobody got why millennials or this generation is investing so much into crypto, or this kind of all-in attitude, this loss porn on Reddit and these kind of things, is that it's a generation that invests fundamentally different. And you just touched up on it as well, that we are, I think, witnessing a shift on the attitude on investing. And there as well, and there comes the question, and we're in the middle of it, is what this generation doesn't get about precious metal. I'm from crypto, and we talked about this last time already, so we're not going to repeat the same topics, but there's one thing that I keep on seeing on content from crypto, let's say accounts or on social media, Instagram, Twitter, is if you had 1 Bitcoin or 1 kilo of gold, what would you choose? And surprisingly, I went down the comments and there was a crypto page, and I see a lot of people choosing for gold. And so I thought okay, they get it. But maybe what is it for you that is still misunderstood in the behavior of, on one part, seeing, for example, those tremendous gains of crypto, this tremendous upsides from one side that are, of course, really attractive for new investors that are not getting the price and even fundamental function of gold and silver and other precious metals?
It's a really, really good question. It's one I'm working through in my mind regularly. All three of us, we kind of fall in that generation that's in between. We're not we're not old enough to be the traditional gold buyers, even though we find ourselves in the business. The profile of the traditional gold buyer. I think that there's always going to be a segment of the population of investors that understands the underlying value of gold and its role in a really well hedged, well diversified portfolio, and its wealth insurance. And I think as young people, these millennials who are probably some of them too young or don't have enough investment capital or a large enough portfolio they're in the wealth accumulation phase of their lives, a lot of them. And I'm not talking about the institutions that are investing and speculating on crypto. I'm talking about people that are they have $10, $20, $50,000 to invest total. They're in the wealth accumulation phase. So when they look at crypto and some of the returns, have been incredible. And it's really hard not to be a part of that when you're trying to grow your wealth and your worth. Aside from all of the attributes that cryptos do have, they have some fantastic attributes. And I think those attributes tie in nicely with technology and kind of the world that the next generation see for themselves. And that's completely fine. I think that's part of it as well. They find it convenient. It suits them very well with their lifestyle. But I think a lot of it ties into the wealth accumulation phase of their lives, because as you get older and as you've accumulated a significant amount of wealth and your portfolio grows, I think it's really straightforward why you should own some precious metals in that portfolio for all the reasons that we talk about regularly. But ultimately, it's wealth insurance. It is the ultimate hedge in a crisis situation. Where, interestingly enough, what I tend to do these days is I look at what Bitcoin does on any given day and what gold does on any given day. And I think there's a misinterpretation that the two are highly correlated somehow, that, Bitcoin, if you don't buy gold, you're going to get the same result by owning Bitcoin. That's absolutely not true. If you look at their latest trading sessions, there's a lot of days where Bitcoin is trading down and gold is trading up. So that's an indicator right away that these two things have completely different roles. And I think, Bitcoin and crypto at this point in their existence, it's still more on the speculative side, the wealth accumulation side of things, and gold is on the wealth preservation side of things. So I hope that shed some light on your question.
What do you think of? Because I really love Raoul Pal, and I listen to a lot of his content and a lot of things he says, and we hope we'll get him on the show soon. But he has 85% in, for example, not just Bitcoin but Ethereum. So he has. I guess he's pretty wealthy at this point. So it's a huge amount of money that he's betting on that trade. And he is a super smart guy. So what does it tell you about the next 10 years, or the role of also, like, because he also used to be big in precious metals, I think, right before as well, or he has maybe this still on the chunk of his portfolio. But what does it tell you about the next 5 to 10 years because he's literally betting on that, like, with his money?
Yeah, I knew Raoul. I have tremendous respect for Raoul. I know him personally. I've interviewed him a few times in Cayman. They're a Cayman-based company, Real Vision. So we had the chance to sit down and talk and get to know each other. And tremendous respect for the guy. One of the smartest people I've ever met. And the fact that he is so long on crypto, he's put it, like you said, he's bet his own money on it. And he was actually the person that really convinced me to put more of my money into crypto as well. So I think it says, what does it say for the next 5 to 10 years? I think Raoul represents now a movement that is very significant, and he's a perfect spokesman, for this movement amongst others. But Raoul has certainly positioned himself very well. I think that it tells us that there are very valid and very smart arguments for owning crypto, and on the flip side of that, I think there are very valid and smart arguments for owning gold. So my answer, like I told you guys last time, and I think you feel the same way, is you should own both. And if Raoul is 85% crypto and 5% gold, and some of us might be 40% gold and 10% crypto, I mean, at the end of the day, that's your own personal investment strategy. And one group will be right, one group would be wrong. But I think the important underlying message is that you should own both in your portfolio. And I think Raoul, would also agree with that.
If we pivot back to the precious metals, I want to talk about some of the maybe the experience supply constraints that we experience in the precious metals sector. How is it? Is it your experience right now that we are seeing constraints? And how can we? What does that tell you about possibly the next coming months or maybe years?
The demand for physical metal, at least in North America, is still very strong. It's at about, I would estimate 80% of the highs that we saw in 2020. 2020 was the outstanding year of the decade for all precious metal dealers. I mean, the demand was incredible. You experienced it as well. We talked about it offline. We're running at about 80% of that demand right now, which is still very, very healthy. So, in terms of volume that we're seeing, I can tell you for a fact that the demand for physical metal is very strong. But if you don't want to take my word for it, just look at the premiums. Look at the premiums for Silver Eagles, for all the best-selling products. They've continued to either rise. I think Silver Eagles are like $1,250 over spot right now, which is insane. Or they're still very high. And you're also seeing some products that are not bestsellers, but like secondary bestsellers, like 10-ounce RCM silver bars, for example. Those all of a sudden are not available to the market. I saw some shortages on 100-ounce silver bars again recently from suppliers. So, I mean, those are facts. The supply chain, the producers are not able to keep up with the demand. I've said it before, the mints and refineries are generally the ones that cause the bottlenecks because they can only produce so much metal per week based on their current capacities, and it takes them a long time to ramp that up. So I think, you don't have to look very far to know that the demand is good. It has been reflected in the price. The price of gold has held that 1750 and up, 1750, 1800 range quite nicely. It hasn't dropped down to 1,600, 1,500. Some people thought we'd be heading all the way back down there. Everybody said that gold is dead. It's lost all its air. That's not true. Gold is not dead. Gold is not going anywhere. So anyone who has doubts about gold going anywhere, I hate to tell you, it's been here for 6,000 years. It's not going away tomorrow. And the price support is there. You see it in the price. So I think the outlook for precious metals, I've been telling people lately, I'm not expecting anything massive to happen from now until the end of the year. I think it's a great time to be accumulating because you're getting it on that trading sideways, trading downwards. We talked about buying on the dip, and you are preparing yourself for the next crisis. When is that crisis going to occur? We don't know, but there's enough risk in the market right now, including the things we talk about, to definitely be getting ready for it.
Well, yeah, it seems, well, and that's, I think, our shared experience. It seems as if there is a pivot or a great awakening happening within, growing customer bases that are really trying to position themselves for a next crisis. Also, maybe being confronted with this real world inflation, seeing how the purchasing power is diminishing, and then hedging against it, trying and accumulating some of the precious metals that have a historic protection against that. Maybe a funny question, but what are the hot or best sellers that you've experienced as of late? And when it comes to precious metals, is it the coins, 1 ounce coins, and which ones are really the favorites of the customers of SWP?
Yeah, I mean, we service primarily the North American market. So, our best selling products are going to be Royal Canadian Mint, 1 ounce Maple Leafs, 1 ounce Gold Eagles. We have a lot of American clients. Even though the Gold Eagles are amongst the more expensive coins, we do sell a lot of those as well. But generally, my recommendations, I talk about this a lot in my other videos and kind of tutorials that I do, is I try to lean people towards bars because they will save some premium. And I think ultimately that's the best way to go. If you're just trying to accumulate ounces and you're not really loyal to any particular coin or mint, I think that bars are a good way to go. But it's always the best selling products. We don't sell as many Philharmonics as you guys might do, or products that are available, PAM Swiss products that are available to you guys in Europe. The best sellers are doing quite well right now, and we're having a hard time keeping enough in stock.
All right.
There's also right now we had COP26 recently in Glasgow. We also had the G20, and on top of the agenda was mainly climate change. And with climate change comes also the topic of silver, more precisely, right? So silver is in many components of what we do use every day, but it also is, if I'm not mistaken, Bart, in solar panels and other components that are in demand. Do you see any of that from a structural demand side, industrial use wise, being also one of the factors that might lead to higher silver prices?
I mean, it certainly could. There's over 100 industrial applications for silver already, and I'm not an expert. I'm not going to claim to be an expert on the applications of physical silver in industry. But I do know enough about it that it's a very diverse portfolio of products, and a lot of those products are either medical or obviously you have the solar panel industry, which is a fair consumer of silver products. A lot of them are technology based. So if you look at the technology space is going to continue to grow. The medical space, I don't know about you guys, but North America can't get enough of medical solutions and facilities and upgrades. It's a huge market which is growing at a rapid pace. So if you look at technology and you look at medical applications alone, I figure there's quite a bit of growth there for silver. The question is, will the mining output remain consistent? How difficult will it be for mines and refiners to meet those needs? I mean, is the argument there to have silver as part of your portfolio? Yes, absolutely. And anytime you can buy silver for less than $25 an ounce before your premiums, I think it's a fairly attractive buy for investors. And I personally, wouldn't hesitate to keep adding silver to my portfolio.
We've seen an enormous boom in the crypto markets, and the question now, of course, is how can people that and is Is it your opinion that some of these people should take into account the risk that they are taking when it comes to cryptocurrency, and perhaps deleveraging that into the precious metals?
Yeah, again, I think it boils down to speculation versus wealth preservation. I think for the most part, there's a lot of speculation and a desire to accumulate wealth with the cryptos. Once you've done that, if you've made $1 million, through Bitcoin or another crypto investment, I think it would be wise to de-risk somewhat and invest in assets that will help you preserve your wealth and grow it at a steady rate over time. So, should people consider not being all in crypto? Yes, absolutely. But on the flip side of that, should precious metal investors who are 80% or 100% precious metals also consider diversifying into crypto or equities? Absolutely. You need a balanced portfolio. I'm not, we're not reinventing the wheel here by saying that, obviously, but I think people do need to be reminded that risk always exists. You need to understand what you're investing in, and you need to know, probably more importantly, that it's not always going to go up. And I think, at least for some portion of crypto investors, their expectations for annual returns are a little bit unrealistic, and that might come back to haunt them in the end. And so they should diversify.
When is the time when you should start de-risking? Because you said, well, when you made $1 million in cryptocurrencies, but what would you say to someone who's up, let's say 50, 60, 70, or hundreds of percentages when it comes to cryptocurrency value?
Yeah, it's a very personal question to answer, but I think it's when you have, the simple answer is as soon as you start losing sleep at night, as soon as you start to wonder or worry about the investment, I think it's time to sit down and reevaluate your position. That's what I do personally. Once it consumes my thoughts and I feel uncomfortable about a part of my portfolio, I will spend time researching and trying to hedge that risk, or at least taking the time to educate myself to reassure myself that the position that I hold is justifiable. But there's no magic number. But look, if you've made a 50% return on an investment in less than a year, that's fantastic. And it's not going to happen every year. I guess that's the point I'm making. Like, I don't know any investment over a long period of time. You can look at any investment over 6 months or a year and say, oh, that was amazing. Gold's done the same thing. We talk about it sometimes. But if your expectation is to make a 50, 100, few %1,000% return on something year after year, I mean, you don't know a lot about how investments work over the long term. And so I would proceed with caution, in that case.
I also think that the upcoming generation, I'm talking about my generation, I'm actually just 27, so I'm a bit younger than you guys, I guess, but are if you've only lived in a bull run, everyone thinks they're a genius, right? So exactly. That's a very dangerous thing. And those people have not seen what money or the account or the investment has done in 2008, right? Like, you got to just 12 years ago, 13 years ago, this happened. So those people who are just coming in the market have not suffered. They've only seen an incremental with some up and down upside. So I think this will hit hard, and people will learn the lesson. Yeah.
I forget the name of the, you're absolutely right. And I forget the name of the condition. There's a psychological term for the condition, but humans have a condition, a predisposed condition where we think tomorrow is going to be just like today. And I don't know where that stems from in our evolution, but it applies to our investment life. So if a stock went up 3% yesterday, our assumption is it's going to go up tomorrow. We don't assume the worst for the most part. So that's why you have to sit down, and that's an emotional response. I think that's why you have to sit down and really take a hard, realistic look at your portfolio. And once your portfolio is large enough that, it's going to affect your family, it could affect your retirement in some cases. You have a lot of professional investors now, people that have retired from their full-time work. They don't have that additional income anymore. They're earning income from dividends, from fixed income products, and from trading stocks and other commodities. You really have to invest the time and make sure that you are protecting yourself and your family. I mean, ultimately, that's why we do this, I think, is for the best of ourselves and for the people that we love. Again, if you're a single guy who's 25 years old and you're rolling in the crypto market and you have nothing to lose, like you have time to anything you lost at 25 years old, you can make it up again tenfold, 100-fold if you're a smart, hardworking person. So it's very significant to factor in where you are in your life cycle and your wealth cycle. I'm kind of turning that page. I turned 41. So I'm now thinking a little bit more long-term, real estate, metal, crypto, yes, but a really diverse portfolio. And if I make less money than the 25-year-old who's rocking in the crypto market, I can go to bed at night and feel perfectly fine with that.
You look way younger than 41, I was about to say, but...
Well, thank you. That's why I brought it up. I was looking for a compliment.
Easy, on a silver plate. On that note...
Mark, thank you again. Of course, it's always a pleasure having you. If you have liked this video, please give it a like. If you haven't subscribed to the YouTube channel yet, please consider subscribing. If you have any questions or comments, in the comment section below.
And if you listen to this podcast on one of the podcast platforms, please give us a rating. You can also send this to any person that you know that might have an interest in the topic or find it valuable.
And then we will see each other in the next episode of the Gold Republic podcast.